Let's now get to the future with Kate. Time for business. Kate Moody joined us, starting with a warning from Apple about the impact of coronavirus on its earnings and its supply of iPhones.
Yeah, it could be at risk, Mark. The technology giant has seen its supply chain and consumer demand hit because of the virus outbreak in China. Analysts say they don't expect the effects to last long, but the announcement has sent Apple shares down 2.5%, and many of its suppliers have followed suit. Catherine Viette reports.
A warning from Apple, as the tech giant says that disruptions caused by the coronavirus will impact its finances.
Work is starting to resume around the country, but we are experiencing a slower return to normal conditions than we had anticipated. As a result, we do not expect to meet the revenue guidance we provided for the March quarter.
The U.S. tech giant had a strong last 3 months of 2019 and was forecasting between $63 to $67 billion in revenue for its second quarter. The range already an attempt to anticipate the impact from the virus. Apple makes most of its iPhones in China, and its factories there have seen production delays.
These iPhone supply shortages will temporarily affect revenues worldwide.
China is also the third largest retail market for those phones after the U.S. and Europe. But with many of its 42 retail stores in the country still closed or operating at reduced hours, Apple says its sales will be lower than anticipated. Last quarter, China accounted for 15% of Apple's revenue, or nearly $14 billion. China remains the world's biggest market for smartphones. Some analysts now say the virus may cut demand for the devices in the country by half into the first 3 months of the year.
Well, the world's largest retailer, meanwhile, is also bracing for the possible impact from the coronavirus outbreak, although it didn't factor that in as it lowered its profit forecast for the year ahead. Walmart reported slower sales in the holiday season and fourth quarter profits that fell short of expectations. Other U.S. rivals like Target and Kohl's have also seen their end-of-year profits slump, although Amazon soared to a new record. Walmart's trying to catch up by focusing on its online business. Shares recovered earlier losses to trade up about 0.5 percentage point. Well, that brings us to the rest of the day's trading action. Right across the board on Wall Street, the Dow Jones has dropped about 250 points, weighed down in part by Apple and its coronavirus warning there. The major European indices also slumped. We saw the CAC down about 0.5 percentage point, the FTSE 100 about 2/3 in London. Shares of HSBC tumbled nearly 7% as profits slumped by 1/3, and the bank announced plans to cut 35,000 jobs. Shares of Alstom dropped 3% in Paris, a day after announcing it would buy the train division of Canada's Bombardier. Well, the French finance minister is in Brussels lobbying for that deal to be given the green light. The European Commission had blocked Alstom's previous attempted tie-up with Germany's Siemens. The French group is trying to shore up its global position and become more competitive against Chinese giant CRRC. Meeting with the EU's competition chief, Bruno Le Maire said the Alstom-Bombardier deal would be good for the bloc as a whole.
There are Chinese champions, there are American champions. To face them, we need European industrial champions and European digital champions to defend our economic interests and our economic sovereignty. It's not a question of weakening competition law, it's a question of adapting competition law to the reality of global economic power relations so that the European Union can play its part.
No sign yet, Mark, whether that will get in the green light or not.
We are waiting for that to happen, and when it does, we know you'll be there with it. Kate with the business, great to see you.